At this time, we will call the meeting of the Sacramento Metropolitan Fire District's Finance Committee to order. Roll call of attendees.
Director Orzali.
Present.
Director Wood.
Here.
And Director Kelly.
Here.
Thank you.
Public opportunity to discuss matters of public interest within the committee's scope, including items on or not on the agenda. I see no speaker cards.
There are no speakers this evening.
All right, then. Moving on to the consent items.
Mr. Chair, I'll move the consent.
Second.
Thank you. We have a motion and a second. Will you please call the roll?
Director Orzali.
Aye.
Director Wood.
Aye.
And Director Kelly.
Aye.
Motion passes.
All right. We have a presentation item of the preliminary budget fiscal year 2019-2020. CFO Amanda Thomas, please.
Good evening, Directors, Chief Harms. Amanda Thomas, Chief Financial Officer for the district. I'm here this evening to present to the committee the preliminary budget that would be recommended to the board at the board's June 13th meeting. So you can consider this the preliminary budget. And it's being presented to the committee in advance for input and comments. Before I get started with my presentation, I believe that Chief Harms would like to make a few comments.
Good evening, Directors.
Good evening.
It has been kind of a busy few months here, one with finishing up the year-end budget and looking at the finances that we're in right now, contract negotiations, and then Amanda and her staff have put together the preliminary budget, and myself and the deputies, along with other input, feel we're at a place for being able to bring it forward to you. I think for myself as a fire chief, this is really the first year that now I'm starting to become very comfortable in that you have a little bit of experience behind me, a little bit of being able to sit down with Amanda and look at where we're at, some projections over what we think is going to happen this year and over the next 5 years. The other thing that we have done, and I'm very happy with Chief Shannon and his group, is looking at those large capital items and where we're at and what is the assessment of the district and really what are those needs as we move forward. And, you know, one of the big ones that we've been looking at and working on is that a number of years ago we bought a number of what would be Type 1 engines or the regular fire engines that you see. And we know that if we don't plan it out, all of those apparatus will come due at the same time. So being able to focus now and saying, how can we move them? How can we take a purchase of 20 engines at once and then spread it out so that we can look at the mileage and the ones that are in the best service and keep them in the fleet as long as we can, and the ones that are beat up, get them moved over to a reserve status and bring some new apparatus into there. So again, this is kind of a time that I really feel that now myself and our executive group has put together a plan and now really have our fingers on it for moving forward. Okay. So just to give you a little bit of an overview of what we'll be talking about this evening, I'm happy to report that the budget that we'll be discussing for the general fund is a balanced budget. So revenues and other sources of funding equal to expenditures and other uses of funding. The budget reflects increases in property tax and IGT revenues for fiscal year 1920 compared to fiscal year 1819, as well as a continuation of the GEMT Quality Assurance Fee, or QAF program, which is a new program for us in this current fiscal year that we think will result in about $2 million of additional annual funding. Labor cost increases in this budget are driven largely by pension and medical contributions, so we'll talk about that a little bit more as we get into the presentation. We also have some significant one-time costs in the 1920 budget for SCBAs and other capital purchases. Looking at it all together, with the balanced budget that's being presented, we're projecting a general fund reserve ratio at 12% or $27 million at the end of the fiscal year.
One thing that I do want to note is that, as I'm sure you are aware, the MOU negotiations are ongoing. So the results of those negotiations will require adjustments to this budget. So this budget doesn't make any assumptions as to what the results of those negotiations would be. So looking historically at the district's sources of revenues, obviously property taxes being an important source of revenue for us, you can sort of see the history through the recession and the recovery. And looking forward to 1920, we're projecting a continuation of the trend in increased property tax revenues and other revenue sources. So for 1920, we're looking at a 5% increase in property tax revenues, going from 149 million to 157 million. Looking at all revenue sources, including the transfer that would come in from the IGT fund, we have about 225 million of general fund sources of funding planned for fiscal year 1920. This chart is showing the recommended preliminary budget for all of the funds that the district would have appropriations for. So the district's general fund is what we'll spend most of the time talking about this evening. And you can see here total revenues of $217 million, total expenditures of a little under $218 million, and then we have transfers that are going out to the Capital Facilities Fund and the Grants Fund. We have transfer coming in from the IGT fund of about $8 million. That's helping to offset those transfers going out. So there's a net of about $724,000 that's coming in. And when you compare that to the difference between revenues and expenditures, we end up with a bottom line of essentially a balanced budget at about $2,000 surplus there. The other thing that I wanted to mention on this chart, because I won't talk about it in the rest of the presentation, is the Development Impact Fees Fund. So that's the third column from the right. As you know, that's where we account for the fees that are collected on new development that are restricted in use to build and equip new fire stations. So we do have $3.8 million of use budgeted for that fund in 1920, and that is for Station 68. So that's planned for fiscal year 1920. Looking more specifically at the general fund, as I mentioned, property tax revenues going from about 149 million to 157 million, so that's an $8 million increase year to year in property tax revenues. Overall, total revenues about a $9 million increase. Looking at total expenditures, going from about 207 million to a little under 218 million. So we have a $10.4 million increase in expenditures year to year in the general fund. As I mentioned, we have that $724,000 net transfer amount coming in, which is then resulting in the $2,000 surplus in the general fund. Looking at the breakdown of our revenues, so property taxes are accounting for about 70% of general fund revenues, including that transfer that's coming in from the IGT fund. Charges for services are the next largest category of revenues, so that's 24%, and that includes our medic cost recovery revenue and other contract service revenue. We have the $8 million operating transfer in, that's from the IGT fund, and then other intergovernmental and other revenue sources. As I mentioned, total projected general fund revenues are $217 million. That's about a $9 million increase year to year. Property taxes are accounting for most of that, $8 million. We are also projecting about a $500,000 increase in our medic cost recovery revenue, and that's primarily the result of a planned rate increase on July 1st to reflect cost inflation. So the district has an ordinance that allows for the adjustment every year of those rates based on an inflation factor, and that would be about a 2% rate increase that would be effective July 1st. And then finally, that net IGT revenue that's coming in is that $8 million, which is resulting in total financing sources in the general fund of $225 million. Looking at our expenditures, so labor costs in this budget are accounting for about 81% of total expenditures, including those transfers out, which are not strictly expenditures, but they are a use of general fund monies. Services and supplies, a little under 14%. Those transfers out are accounting for about 3%, and that's money that's going out to the Capital Facilities Fund and to the Grants Fund. And then we have taxes, licenses, debt service, and others. It's about 2% of planned general fund use of funding. Looking at the labor budget, this budget includes $174 million of labor cost, which is a $7 million increase compared to the current fiscal year 18-19. The most significant changes that are contributing to that increase include increases in required pension contributions. This is both to CalPERS and to SCRS. That's accounting for about $4 million of the increase. Increases in OPEB contribution. We have assumed increases in medical premiums that would be effective January 1st. We're also showing some increases in shift and day overtime costs based on projected activities. And then we have some additional filled positions, including assumptions about larger academy sizes in fiscal year 19-20 compared to what occurred in fiscal year 18-19. With the additional filled positions, so the positions that we have online, that when they're not filled, they're backfilled with overtime. Because we assume that they are filled in the budget going forward, we are reflecting reduced callback overtime costs in the 19-20 budget compared to the 18-19 budget, and that's about a $7 million reduction in that line item, which is then offset by increased salaries and benefits costs associated with the filled positions. Looking at our services and supplies expenses, that budget totals $31 million, which is about a $3 million increase compared to the current fiscal year. Some of the larger items contributing to that increase are $1 million for additional contract ambulance units. So we're assuming that that would go from 4 units to 6 units effective at the beginning of the fiscal year, and that would result in additional costs associated with additional service provided. We also have about a $700,000 increase for SCBA supplies. So this is the non-capital, non-grant funded portion of the SCBA purchase. So it's kind of split out into 3 different parts of the budget. You'll hear me talk about it. But this is just the supplies expenses. It's about $700,000, which would be a one-time expense in fiscal year 19-20. And then $600,000 for an increase in our liability and property insurance premium, and that's based on the quote that we received. The final category of expenses in the general fund is the debt service assessments and contributions, and that budget totals $5 million. About $2 million of that is the assessment that's paid to the county for property tax administration. And then we also have $1.4 million assessment that's being paid to the state in connection with the GEMT QAF program. So that $1.4 million is used by the state to then pay a higher rate for Medi-Cal transport. So this is, as I mentioned, a program that ultimately should generate about $2 million in net revenue for us, but it does require us to make a payment. And then finally, in this category of expenses, we have some general fund debt service of about $600,000. So rounding that out, our net transfers, we have $7 million that's going to the Capital Facilities Fund and the Grants Fund. That's about a $1.8 million increase compared to this year. But we also have $8 million that's coming in from the IGT fund, and that is a $1.2 million increase compared to this year. So we are expecting increased IGT revenue primarily as a result of higher federal match rates on the Medi-Cal beneficiaries who are part of the expansion population, and that refers to the Affordable Care Act. So there's a higher federal match for Medi-Cal participants who are participants because of the Affordable Care Act, and that higher federal match allows us to receive additional funding as part of the IGT program. So that's the big change that we're seeing year to year. We're actually participating in terms of funding of the IGT at a lower level than we have in the past, but we're receiving a higher reimbursement because of that higher federal match. Okay, turning now to look at the Capital Facilities Fund. So the Capital Facilities Fund budgeted expenditures are $13.2 million, which is about a $375,000 increase compared to 1819. And those expenditures are funded with the issuance of capital leases. So we're assuming $5 million of the capital purchases would be financed in fiscal year 1920. Then we would have a transfer coming in from the general fund of $6.8 million. And then finally, we would fund about $1.4 million with existing fund balance in the Capital Facilities Fund. One of the things that I did want to mention is that one of the items that helps to contribute to fund balance in this fund are the sale of assets. So I know that you're aware that Station 33 was recently sold by the district, so that funding will be fund balance that would be available for investment in district facilities in the future. So looking more specifically at the Capital Facilities Fund, as I mentioned, there's a net funding requirement of $7 million from the general fund. That's primarily to fund debt service payments. That's what that transfer is paying for. About $500,000 of that $7 million would be related to 1920 capital purchases, so debt service related to capital purchases that would be made in fiscal year 1920. The actual capital outlay budgeted for 1920 is $7 million. 1.4 million of that is rebudgeted from fiscal year 1819. So these are items that were originally budgeted in fiscal year 1819, but now are not actually going to be expensed until 1920. And then some of the major capital purchases for 1920 are 3 Type 1 engines at $2 million, 2 water tenders for $900,000, the SCBA equipment. So this is not the supplies that I was talking about earlier, but items that actually are have a unit cost of $5,000 or more, and these are not grant funded, but in addition to the grant purchase, there's $800,000 of that equipment included in the 1920 budget, and then we also have 3 ambulances for $600,000. So now turning to look at the grant fund, which is going to be the last piece of the SCBA story. So the grant fund for 1920, the entire budget here reflects the regional AFG grant for the SCBA purchase. We have $4 million in what is a combination of grant revenue and local match coming in from the regional agencies who are participating in the grant. And then there's about $460,000 that is the district's match, and that's coming in from the A fund. And the sum of those two is funding about a $4.5 million purchase. And the last fund that we'll talk about tonight is the Leased Properties Fund. So as you know, this is where we account for the revenue and expenses of the district's leased properties. You'll see that we're budgeting for about $1 million in rental income in 1920, which is a significant increase compared to fiscal year 1819. And that's the result of now having, a stabilized tenant on the first floor of this building. So we essentially didn't have rental income coming in 1819 because of the transition and the lease of the first floor. We had rental income coming in from other properties, but not from this building. So you'll see the increase next year because we now will be reflecting a full year of rent for the first floor of this building. Expenditures are about $700,000, and that's actually a decrease compared to last year, again, because there were some one-time costs associated with tenant improvements that happened last year. So comparing revenues and expenses this year, we're projecting a surplus of about $380,000, and that any surplus would allow a fund balance to accumulate, which could be used for future needs of the district's leased properties. I think we'll be kind of evaluating based on the experience that we had over the last couple of years of having some funding needs but not having the funding available in this fund, what the appropriate level of funding is on a go-forward basis to handle some of those major items that will come up with our leased properties as they age. And that covers my presentation for all of the funds. I'd be happy to take any questions you might have.
Questions, gentlemen? Please.
Thank you for the report. This is, as always, excellent work, and I truly appreciate it. One small item, there was a reference there to the 2% increase cost that in the cost of medical transport. And that turns into about a $500,000 increase annually. Have I got that right?
Correct. So there will be a recommendation to increase the rates that the district charges by about 2%. It's based on the inflation factor that's included in the ordinance that covers those fees, and that increase is expected to result in additional revenue, which accounts for most of that $500,000 increase that's being projected from year to year. In other words, we're projecting fairly stable activity year to year in terms of the number of transports, but that rate increase
That's where I was headed, is some component of that
Right.
increased numbers of transports.
Yeah, very marginal. Most of the increase is the result of the increase in the rate itself.
Okay, great. Thank you.
Thank you, Mr. Chair. Thanks so much, Ms. Thomas. You had mentioned that there was a, $600,000 increase in insurance premiums.
Yes.
And do you know, as you stand here, what's driving that? Is that a experience modification that we've dealt with, something in our history? That's a big chunk. Seems bigger than
Across
before.
a lot of policies. Is it across a lot of policies, a lot of different policies?
Yeah, I mean, my understanding is it's related to the claims experience that we've had in the last few years. I'd be happy to let Chief Harms elaborate.
So we had 2 years ago budgeted about $650,000, and a number of those is just related to our vehicles and vehicle accidents. The next year went up to about $730,000. Our initial sitting down, we expected it to be about $820,000, and it came in at $1.2 million. Over this past year, we've had 4 events that were significant events. If you remember, we had 2 battalion chief accidents that involved other folks that ended up being transported to the hospital. We had a motorcycle that ran into the back of an ambulance that's going to have significant impact. And then we had engine 111 that was stolen. While we don't suspect that we're going to pay on engine 111, I shouldn't say that. I'm not sure what's going to happen with it, but we have turned in probably 10 claims to SDRMA that are being able to manage those. The difference has been is that we've had 3 significant accidents, and we've actually had people that have had to be hospitalized because of those. And so we definitely see a direct correlation between those accidents recently and what we're paying for insurance.
So from a risk management standpoint, what are we doing to address those situations where we can understand 111 was stolen, and certainly there's learning that can be done there, but in the other, is there some sort of training, EVOC?
Yeah, so we have done a number of things with EVOC, with training, the identification of the smaller accidents and how those lead to bigger accidents, continuous driver training. The last 6 or 7 days, we met with every member in the district, and we went through all of our accidents in the last 6 months and talked about those and the number of them, what ones were where we were hit, and then a large number of them that we actually caused, and what are the strategies for being able to prevent those. We went through and talked about the cost, the increased cost, so that everybody gets a snapshot of what it is. One of the things that was asked of us was that, much like we do on fires, can we send out a snapshot of what's happening in the district, what things are happening, what are those costs, what are those high risks. But we did talk a lot about Code 3 driving, and our very high risk is entering the intersection. And if you look at the 2 BCs, they cleared the front part of the intersection. They were moving forward, and it was that last lane that they didn't clear that we collided with that vehicle. We talked a lot about that, and again, now we're following it up with training through EVOC.
Thank you. Thanks. Thank you.
Any other questions? No?
We're fine.
Thank you again for your time and work on the budget.
Thank you.
All right. Any other comments or questions by board members?
None.
Next meeting date is June 27th in this room at 5:30 p.m. We don't have any anticipated action items. If you guys have something you need, by all means, let us know. Call this meeting adjourned.